the much-awaited draft rules that will govern the issue of new bank licenses is out. Now, most of the rules, like the minimum 500 crore rupee capital requirement, no permission for real estate companies, were pretty much along expected lines. The surprise, though, is in who is eligible for the license. Lata Venkatesh and Gopika Gopikumar bring you the guidelines.
The RBI's draft rules that will govern who will get new bank licenses has thrown some shocks. No group of company with more than 10% of revenues coming from broking or real estate will be eligible. That rules out a bunch of broking aspirants. What's worse, the central bank says promoter groups who want to set up banks must have diversified ownership, professional management, adequate corporate governance and 10-year successful track record. This, while excluding some young aspirants, also makes the entire choice discretionary. Among the other key rules are that the promoter group has to set up a holding company that does nothing but hold the bank and other financial companies of the group. The promoter has to bring down his stake to 40% in 2 years, 20% in 10 years and 15% in 12 years. Foreign holding in the bank may be no more than 49%. At least 50% of the directors will be independent. The minimum capital requirement will be 500 crores and the promoter shall provide a game plan to achieve financial inclusion.
Well, those are the guidelines now. Lata Venkatesh, our banking editor, joins us with more details. Lata, we've been waiting for these guidelines, most along expected lines, but some key points like diversified ownership and the fact that broking entities have been left out altogether, that's not going to go down well, is it?
No, it isn't, because most of the aspirants were people with large broking practices and they were eyeing this, this cheap capital that be available if they could gather deposits. So by preventing that, the Reserve Bank has not only put, a huge roadblock or shut the gate on these aspirants, it has also told you another thing, Shireen. It's told you why the Axis NAM deal was not getting cleared. They don't want even a shadow of brokers on banking entities. So anybody who is thinking, any bank that is thinking of boutique investment banks like JM Financial, better watch out. But it is this diversified ownership, as you say. All these are very qualitative ideas. What do you mean by, ownership and management should be separate? What do you mean by promoter group entities should have diversified shareholding or ownership? You could, where do you really draw the line? Should it be 50%? Should the promoter have just 25% ownership in most of his companies? What do you mean by professional management? Some of the owners also run their companies. They're not necessarily unprofessional. So this is going to be a contentious issue.
Well, you've raised many of those contentious issues, Lata. Let's go across now to get more perspective on those contentious issues. We've got Bobby Parekh of BMR Advisors and Sunil Godbani of Religare Enterprises, as well as Ajay Srinivasan of the Aditya Birla Group. Gentlemen, many thanks for joining us. Mr. Godbani, if I could come to you first, because it seems like your aspirations are going to be the ones that are, in a sense, going to be dashed by these new guidelines if they were to finally come into effect. Your reading of this and the fact that broking entities have been left out?
No, I don't think our expectations are getting dashed at all, Shane. In fact, you just look at the guidelines. What they're exactly saying is that they're giving a lot of emphasis on the pedigree of the promoters. I mean, under the eligible promoters, what the RBI guideline is stating that the promoter should be of a good pedigree, and rightfully so. It's a fiduciary business. They should have a track record of running businesses over a period of 10 years. Our promoters and the promoter group have that experience of running successful businesses for the last 10 years. More importantly, we have built up under them a fiduciary, a very highly well-respected financial services business, which is diversified.
I get all of that, Mr. Godbani, and I'm sorry to interrupt you, but the Reserve Bank very clearly says that any entity that derives more than 10% of its income from broking or real estate operations will not be eligible.
No, what it says is basically the promoters diversified businesses. So our promoters' businesses involve Fortis or a lot of other businesses that we are in. The emphasis
no, but it very specifically says that if you're in the broking business, then you're not eligible.
No, what it says is basically the way I've read it and understood it is that the promoter groups have diversified ownership and sound credentials, and under that there's a separate portion that their businesses, they should not compose more than 10% coming from the real estate or broking businesses. So if you look at the entire promoter
in your case you do derive more than 10% of your income from the broking business. So how do you then
not if you put the entire consolidated business of the promoters and look at it that way.
Okay,
you have to look at the entire promoter group. And
hold that thought, Mr. Godwani, because we've got an interesting discussion here. Let me get Bobby Parikh into this. Bobby, you've just heard Sunil Godwani there saying, and that's his assessment, his understanding of the guidelines. How would you read this?
I think at least my read of the guidelines seems to align with what Sunil just summarized. I think that the real estate and the broking references and the turnover references are to 10% of the total group. And so you'd have to look at all the group's activities and see if these activities, the assets or the income from these activities constitutes 10% or more of the group's assets or income. And if not, then you ought to be eligible.
So you believe that in this case we're talking about Religare would be eligible to apply for a banking license, even though what we've heard from the Reserve Bank very clearly seems to suggest at this point in time. And again, I'm going to get to the larger issue of where the Reserve Bank has not clarified what it really means by diversified ownership. The point that Lata was also making, it doesn't clarify what it means by separating ownership from professional management. How do you read that, Bobby, before I get back to Mr. Godwani?
I mean, that's a tricky one, and these are expressions which don't have any technical definition. So I would just say that the Reserve Bank will reserve the discretion to interpret these terms, and they will sort of exercise their judgment in terms of whether there is a distinction, whether it is a so-called promoter-run company or whether it's a professionally managed company. I mean, these terms are used very loosely, but when they form parts of guidelines and they form parts of eligibility conditions, they become difficult to interpret, and I don't think that there will be any I don't know if there will be any greater clarification. It will be reserved for Reserve Bank's judgment.
Mr. Godwani, does that not worry you, as we've been discussing through the evening, that the Reserve Bank has not clarified what it means by diversified ownership? It does not clarify what it means by this business of separation of ownership from professional management, what it means by professional management. Do you not fear the fact that there is going to be a lot of discretion at the hands of the Reserve Bank, and hence people like you perhaps are not going to be particularly happy with what the end results may be for you?
I think, Shrin, very honestly, to admit the fact, yes, there will be discretion at the hands of the Reserve Bank. They are the governing, the regulatory authority for this. But in my mind, I'm very clear is that what they are talking about is non-operative holding company. That's what Religare is. We do not have the promoter sitting on a board. We have segregated ownership versus management. And it is a professionally run company with a full understanding of the fiduciary business and the responsibilities that encompasses. That is what basically Reserve Bank is talking about. Of course, I do agree. There is a lot of clarity that will come up, and we have to be, sensitive on the fact this is a draft guideline. This is going to throw up points for discussion, and what finally emerges could be significantly different.
But Mr. Godwani, as we've just heard from Bobby Parikh, and as we've heard from several people through the day, one doesn't really expect significant changes as far as these draft guidelines are concerned, because the consultative process has been long and exhaustive. So one is not really anticipating significant changes. If you can take me through your main issues of contention, really, as far as these guidelines are concerned, and where you would like to see more clarity. Of course, the broking part of it is one aspect, but where would you really like to see more clarity?
I think the way it's looking, it's pretty robust. It's a well thought of strategy. Where I would like to see some more clarities on the foreign shareholding coming in, on what exactly kind of people who would be allowed to come in and partner, along with getting the financial inclusion into reality, because they are talking about 25% of the branches being in the tier 3 cities, which is very good. They've already spoken about financial inclusion, but there has a clarity to be required there on what kind of technology partners will be allowed and what kind of processes we can get encompassed there to really make that reality. So there is a clarity required on that side in my mind. Otherwise, I feel the way they have laid it out is pretty robust. It is very clear from our perspective. It is clearly demonstrating that they want the right people with fiduciary understanding to run the business, professional managements to run it, independent boards to govern it, which all is very good.
So you still believe, in spite of what the guidelines say, that 10% of your income, if it comes from the broking business, you will not be eligible, but you believe that that is going to be on a consolidated basis and hence you stand to be eligible for a license
The way
if you want to apply.
it reads under the guidelines of eligible promoters. So it does read as a part of the entire promoter group. The way it reads right now. However, way we can always align our business, if required, to the regulatory intent, if that is what is required also,
All right, you're happy to maneuver to meet the regulatory intent, but Bobby Parikh, back to you, and I'm going to get you to respond to some of those issues that Sunil Godwani raised there. And this is the consensus that we seem to be getting, is that perhaps in a sense this is one of the most open-ended circulars that we've seen from the Reserve Bank. Whether it's issues of foreign shareholding, which they've said has to be 49%, listing after 2 years, and so on and so forth. What do you believe will be the challenges given the way that the guidelines currently exist, and also your assessment? They haven't put out a number, but your assessment really on the kind of floodgates this is actually going to open up.
So, the first question first, in terms of whether the guidelines are open-ended or what. I mean, I think there is still feedback which is sought, and so there is room to give feedback, and then perhaps some of that might get reflected in the final guidelines that are or the final sets of guidelines which are published and which are implemented. But really, on the matters that we were discussing in terms of some of these aspects about what will constitute in effect fit and proper is something which I think will always remain Reserve Bank's judgment, and that I would reckon is probably the prerogative of central banks to determine who is fit to receive a banking license and who's not, and then there's only so much that you can spell out with precision. Having said that, I think a lot of the other things have been fairly clearly articulated. What's the minimum capital, what's the level of ownership that a promoter must have, and how, when it should get diluted, listing, etc., etc. So all that has been laid out. Now, from a challenges perspective, I think that there is I think the 25% of the branches being in unbanked areas, and for a new business to be built from scratch on those requirements is something which will be which is going to be somewhat difficult. This 25% unbanked requirement is there for all banks today, but it's a requirement which has come in relatively recently, and so banks have had time to be able to scale up